In the intricate dance of the global economy, taxation plays a pivotal role, guiding nations as they navigate the complexities of growth, fairness, and competition. As countries become more interconnected through trade, investment, and digital technologies, crafting effective tax policies resembles choreographing a ballet on a global stage, requiring careful balance. One major challenge is tax competition, where countries compete to attract multinational corporations by offering lower tax rates. This race to the bottom can erode governments' ability to fund public services. Tax avoidance and evasion, especially by multinationals shifting profits across borders, further complicates revenue collection. The rise of the digital economy, where companies like tech giants operate globally without physical presence, adds new layers to the challenge. In response, global collaboration has intensified, with efforts like the OECD's BEPS project, aiming to harmonize tax rules and prevent tax avoidance. Proposals for digital services taxes target revenues from digital companies, ensuring the tax system adapts to the changing nature of global commerce. Tensions arise over sovereignty, with nations, particularly developing ones, concerned that global tax reforms may disproportionately benefit wealthier countries. As tax transparency measures, like the Common Reporting Standard, CRS, grow, they help shine a light on previously hidden financial movements, ensuring better enforcement and protection of revenues. The future of global taxation will require creativity, collaboration, and a commitment to fairness. As the world economy evolves, taxation will continue to reflect our values and aspirations, balancing competition and cooperation to support sustainable growth and equitable development. The world of tax havens is a shadowy realm where the wealthy and corporations exploit loopholes to minimize their tax burdens. While often legal, these havens allow for the concealment of vast wealth, draining public funds needed for essential services like healthcare and education. By hiding assets offshore, the rich avoid paying their fair share, deepening global inequality and shifting the tax burden onto ordinary citizens. Efforts like the OECD's BEPS project aim to curb these abuses, but progress remains slow. Tax havens not only undermine national tax systems, but also fuel a growing divide between the elite and the rest. Without stronger global cooperation and reform, these financial shelters will continue to erode the social fabric, allowing the powerful to profit at the expense of everyone else. The global battle against tax evasion and avoidance is like a high-stakes chess game, where countries and organizations make strategic moves to protect their fiscal systems and ensure fairness. This fight goes beyond recovering lost revenues. It's about creating transparency, promoting equity, and stabilizing the global economy. Tax evasion and avoidance undermine trust in tax systems and unfairly shift burdens onto law-abiding citizens. The OECD's Base Erosion and Profit Shifting BEPS initiative and the Common Reporting Standard, CRS, have made significant strides in closing loopholes and improving transparency, allowing nations to track and tax profits where they are truly generated. These initiatives, combined with efforts to regulate the digital economy and target offshore accounts, aim to end the secrecy that allows tax evaders to flourish. While challenges remain, the international effort to combat tax evasion and avoidance signals a commitment to fairness in the global financial system. With ongoing cooperation and innovation, the hope is to dismantle the shadows where these harmful practices thrive, paving the way for a more just and equitable global economy. Imagine embarking on a global journey where borders blur and businesses and individuals navigate the complex waters of international tax systems. In this realm, double taxation, when two countries tax the same income, can feel like navigating a stormy sea. Here, double taxation agreements, DTAs, serve as crucial guides, offering fairness and certainty in global economic activities. DTAs are treaties between countries that prevent income from being taxed twice. They define which country can tax specific types of income and provide mechanisms, like tax credits, to ensure taxpayers aren't penalized unfairly. These agreements foster international investment by reducing tax burdens, making cross-border expansion and global careers more viable. They also create a predictable tax environment, crucial for businesses making long-term international plans. The complexity of DTAs and the rise of the digital economy pose new challenges. As businesses operate virtually anywhere, traditional tax rules struggle to keep pace. The OECD and others are working to update DTAs for this digital age. In the grand scheme of global trade and investment, DTAs are more than legal instruments. They are essential frameworks that enable international collaboration, economic growth, and prosperity. The digital economy has reshaped global commerce, challenging traditional tax systems that rely on physical presence. Companies can now generate significant revenue in countries without a local footprint, complicating tax rules. To address this, the OECD has proposed a two-pillar solution: reallocating taxing rights to countries where users are based and introducing a global minimum tax to prevent corporate tax avoidance. These reforms aim to create a fair and efficient tax system that ensures digital giants and traditional businesses contribute equitably. However, global consensus is difficult, with countries balancing their fiscal needs. Adapting international taxation to the digital age is crucial for a fairer and more inclusive global economy. The future of international tax cooperation, with globalization and the rise of the digital economy, traditional tax systems face new challenges, particularly from tax base erosion, profit shifting, and the complexities of taxing digital businesses without a physical presence. Key initiatives, like the OECD's BEPS Action Plan and the Common Reporting Standard, aim to promote transparency and fairness. More inclusivity, especially for developing countries, and technological advancements in tax administration will be crucial to creating a robust, fair global tax system. As nations collaborate, the goal is to establish a system that adapts to the realities of the digital age, ensuring all entities contribute fairly and fostering global prosperity.